So let's move toward one more good question. We covered OCR question in previous lecture. OCR. In the original question, there was one more part. So let's discuss that part. Exhibit 2. We have covered requirement A of the question. So requirement B and C left, and there is exhibit 2, some information available. Your firm is required to conduct an audit of the performance information. Performance information of another client, Moosewood Hospital. What is performance information? Statement of KPIs, where company stated some KPIs and company is preparing a statement at the end of the year, what KPIs they met, what they haven't met, to show their performance. You are required to provide assurance with regard to both the occupancy and completeness of 3 key performance measures, which are used to monitor the hospital efficiency and effectiveness. Mean company have set 3 measures, and you need to verify whether those measures have been met or not. The performance measures, all of which the hospital claims to have met, are to maintain an average patient to nurse ratio of no more than 6:1. Mean there must be one nurse for 6 patients, because one nurse maximum can tackle 6 patients, not more than this. If she is managing more than 6, she will not be managing effectively. How we can verify there is a 6:1 nurse ratio?
By the HR information sheets, like printed reports of staff.
We can compare nurse, our record sheets with the patient's record. With patient's record to see there is a 6:1 ratio. What else? What else? We can visit the ward and observe by count head. There is one nurse available for 6 patients. It will count the number of patient in the ward. We will count the number of nurses in the ward. So we can observe by visiting the ward. What else? We can inquire from the patient regarding which nurse is managing them, which nurse is helping them. If 6 said this and 7 said this one, this means there is no 6:1 ratio. If 6 said yes, this nurse, and the 7 said other nurse, this means there is 6:1 ratio. So we can inquire from the patient in the ward regarding which nurse is treating them. 3 procedure we can write down. Is that? The other is to achieve a minimum 75% annual usage of surgical room. And if surgical room is there for surgery, so that must be used properly. How much it should be used? Minimum 75% it must be used. 75% mean out of 24 hours, 18 hours surgical room must be used in a hospital. How we can verify the surgical room is used 75%?
By the occupancy of occupied.
We can inspect the surgery record. We can inspect the surgery record to verify how many surgeries taken place. We can inquire the surgeon what is the average time per surgery and how many surgeries they perform in a day. So that by multiplying average time with the number of surgery, we can find whether 75% is used or not. We can visit the surgery room and observe for how many hours it is going to be used. Is that? We can inquire from the admin staff or any of the security staff how many hours the surgery room is open and used. 3 procedures at least we must be able to write down. Number 3, to ensure that the rate of admission within 28 days for previously treated conditions does not exceed 3%. What does that mean? Only 3% of the patient coming again, mean visiting again the hospital within 28 days, not more than this. Because if more than 3% are coming again, this means on previous visit they were not treated properly. How we can verify? Only 3% patients coming again for the treatment within 28 days. How we can verify? How we can verify?
Which one, sir?
The last third one. Mean how much percentage of patients coming again within 28 days? We can compare current patient record with the past patient record to identify with past 28 days patient record to verify how many patients coming again to calculate the ratio. What else? We can visit the hospital visiting area and inquire from the patient when they last time visited the hospital. Like we can inquire from 100 patients in the visiting area to inquire when they last time visited the hospital. If up to 3 said yes, we last time visited within 28 days. If more than 3 saying yes, within 28 days we last time visited, this means criteria is not fulfilled. What else? Asking not the surgeon, asking the admission patient admission staff. Asking the patient admission staff how much percentage of patients are coming again within 28 days. So at least three procedure for each we must be able to write down. Okay, what is the requirement? Requirement B. Explain the difference between performance audit and audit of performance information. Performance audit means checking the performance of any individual, any department, or any business unit, and this is a function of internal company management who perform this mainly internal auditor. This is internal audit activity. While audit or performance information is what expressing opinion on the performance information report prepared by the company. This is an independent auditor activity that could be performed by any external firm if company need to attest this performance information report, where company have defined some KPIs. At the end, they measure what KPIs they meet and they prepare a report that might be they going to report include into the annual report. But they want to include verified report. So who will verify? External audit firm. That will be independent audit. While performance audit is what internal management function, measuring performance of any individual, any department, or any business unit. And part C, using the information provided in Exhibit 2, design and the examination procedure which should be used in auditing the performance information of MOSO. That we have discussed procedures for each KPI.
Yeah, but that is 11 marker. That is a different one, right?
No, 11 marks, that is part A that we have already covered in previous class. Matter to be considered and evidence leading to cost of inventory and impairment. Part A of this question we have already covered in previous class. Currently we are covering part B and C. In previous class we discussed Francis question and Osier question. Is that? Shall we move forward?
Yes.
Okay, moving towards one more good question. Saturn. So we are having this question Saturn. Part A for 8 marks, B for 7 marks, C for 5 marks. And the requirement for all three: comment on the matters to be considered, materiality, accounting standard discussion. If company treatment is explained in the scenario, then we need to discuss risk of material misstatement as well. If company treatment is not explained, just materiality and standard discussion. And explain the audit evidence you should expect to find during your file review in respect of each of these issues described in working paper. What should be the evidence relating to this matter? Are you with me? I mean, the same question we covered Francis and party of Osier. Matter and evidence. After procedure evidence. In the working paper.
8 marks is full of evidence.
No, part A, you need to deal for 8 marks, including matter plus evidence.
So we need to discuss the matters.
Materiality, accounting standard. And then for 4 marks, you need to provide evidence. So you are the manager responsible for the audit of Satter Store Company, a company which operates supermarket across the country. The final audit for the year ended 31st January 2023. Year end is 31st January. This was started 1st February 20x2. Nearing completion, and you are reviewing the audit working papers. The draft statement recognized total assets of $300 million, revenue of $620 million, and profit $47.5 million. Can you deal part A and C whether the matter is material or not? What accounting standard will be applied here? So heading is saying asset held for sale. This means there is application of IFRS 5. In case of asset held for sale, company need to provide a separate disclosure. If company is going to dispose of significant asset. This asset must be classified in current asset, and company need to cease depreciation on this asset. So Saturday Store Company owns a number of properties which have been classified as asset held for sale in the statement of financial position. The notes to the financial statement state that the properties are all due to be sold within 1 year. On classification as held for sale in October 20X2, during the year, the properties were remeasured from carrying value of 26 million to fair value less cost to sell of 24 million. Yes, you need to state on fair value. So which is the amount recognized in the statement of financial position at the year end, and this 24 million is material to total assets. Is that against total assets? We will calculate materiality, and we will discuss for IFRS 5. This asset must be separate classified between current assets. Depreciation need to be ceased on this asset, and there must be a disclosure in the financial statement.
So we should record it lower of this, right? Both carrying.
No. That is a lower of an inventory.
No. I mean, then what will be the asset valuation?
I mean, its carrying value was 26, but you are going to sell it, so you need to measure it on fair value. When you have decided held for sale, you're gonna transfer from non-current to current assets. So in current assets, you should record on fair value basis. 24 million. Is that what should be the evidence? If company going to sell, ultimately this was decided in board meeting. Board minutes copy in the working paper. Board minutes copy to verify how management considering the account balance and accounting for it to see if reasonable. What else? Sale contract. Yeah, you can say sale agreement copy or advertisement copy to verify sale is going to be happen. Evidence. That should be in working paper after the procedures. Fair value calculation copy. Fair value calculation copy to verify fair value based on market rates. What else? Financial statement extract copy to verify separate classification as well as completeness of disclosure for IFRS 5. Is that? And this asset must be going to sell within 12 months. So copy of discussion with the management regarding the likelihood of disposal within next 12 months.
So that is there in the review board mentioned.
But we need to discuss with management as well because it's not sold yet. So you can classify as a held for sale if there is a likelihood of selling within 12 months. So that we discussed with the management. So notes of discussion with management regarding the likelihood of disposal of assets within 12 months to see if reasonable. Is that evidence in the working paper? Please be careful. Not procedure. After procedure, what you are having in the working paper. After performing procedure, what you are having in the working paper. That we need to write down. This is the area where students are struggling. From their side, they have attempted for 8 marks. But what they have attempted? Okay, part B for 7 marks, try please. The issue is explained in the heading even.
For this, for these type of questions, our FR knowledge should be strong.
Yeah, accounting standard knowledge should be strong.
Sale and leaseback and provision also.
This is IFRS 16, right? See?
Sale and leaseback, IFRS 16. If we discuss about sale and leaseback, for IFRS 16, first you need to record accounting entry of sale. Mean you need to record debit cash, credit asset, and if you are getting any gain on sale, so that must not be recorded as gain, that must be recorded as deferred income and amortized over the lease period. Gain mean in this transaction, if you are having any gain, mean first you need to record entry of sale, cash you received, asset gone, asset credit, and if you receive cash more than the asset carrying value, there is gain, but this should not be recorded as gain in P&L. This should be recorded as deferred income and should be amortized over lease period. Are you with me? And then you need to record the lease entry with the debit asset. I mean, you need to recognize asset with a new amount against lease liability. So that now depreciation should be charged on this new asset amount and finance cost should be recorded on this lease liability. This is the accounting entry of sales and leaseback. We have already discussed this in Bluebell question. Is that what happened here? A sale and leaseback arrangement involving a large property complex was entered into on 31st January 2023. The property complex is a large warehousing facility which was sold for 37 million cash. Its fair value at the date of the disposal. The facility had a carrying value at the date of 27 million. This means 10 million was a gain. That should be recorded as deferred income and amortized over the lease period. The only accounting entry recognized in respect of the proceed raised was to record the cash receipt and recognize a non-current liability classified as obligation under lease liability. Means they have recorded what? Only this cash and this lease liability. This means the asset was not de-recognized.
No, it should not be derecognized because it's a finance lease.
It's still in the financial statements with the 27 million. Instead, it should have been eliminated with 27 and re-recognized with the 37. Mean the entry should be 37, 27, 10, and this will be 37 and 37 again. So they have recorded only cash and liability. This means asset is recorded on 27 rather than 37. This means asset is understated. And might be they have charged this as a gain to P&L. So in that case, profit could be overstated, liabilities understated. Is that? So what happened here? The lease term is for 20 years, the same as the remaining useful life of property complex, and Saturn Store Company retains the risk and reward associated with the asset. So we have discussed the materiality. We can discuss the 10 million with the profit and this 37 million with total asset. Sir, what should be the evidence in our working paper?
Related to this,
Lease agreement copy to verify the term of the lease, its time period, and any interest rate.
Bank statement to bank statement, bank statement records.
bank statement.
Bank statement, cash or bank statement copy to verify cash receipt of 37 million. What else? Notes of discussion with the management regarding the accounting treatment of the difference amount of gain 10 million, whether it is recorded as deferred income and amortized over the lease period.
So this is a procedure.
Notes of discussion with management.
The wording of the,
Discuss with management, that is procedure.
yeah. Notes.
Notes of discussion with management. The remaining thing will be same. Why you perform that procedure. Board minutes copy. To verify how management considering the account balance and accounting for it to see if reasonable. Notes to the accounts copy to verify completeness of disclosures for IFRS 16. Because for leases, company need to provide detailed disclosure. So notes of to the accounts copy to verify completeness of disclosure for IFRS 16. Its useful life is 20 years. How we can verify? This asset must be depreciated over 20 years useful life. So notes of recalculation of depreciation using the rate and method to verify accuracy.
Or market research about market research report about similar assets with useful life to see its useful.
That we can write down, but there are only 7 marks available. 3 to 4 evidence are enough. Part C, try for 5 marks, please.
It is related to the IS 38 and the cost measurement should be in line with the IS 38 principle. Meaning that as assumption used to recognize the development cost has to be met the criteria.
So the statement of financial position include an intangible assets of 15 million. So first calculate materiality with total assets, which is the cost of a distribution license acquired on 1st September 20X2. This means from 1st September onward, its amortization should be charged. September, October, November, December, January, 5 months. Amortization should be charged because year end is 31st January. The license gives Satter Store Company the exclusive right to distribute a popular brand soft drink in its store for a period of 5 years. So we'll calculate its amortization how 15 by 5 years. Whatever the value is there, that we need to multiply by 5 by 12, and this value we will check materiality with the profit. This is what amortization is that. So per IAS 38, if this asset is meeting capitalized criteria, mean providing future benefit to the company, must be capitalized under non-current assets. And per IAS 38, it must be amortized over useful life, and the amortization should be this, and hence material to profit, so should be recognized. Is that? Now we need to write down evidence leading to this. Company acquired, purchased. So this means
Purchase document, sorry, purchase document.
purchase contract copy,
License copy.
purchase contract of license copy to verify the license acquired on 1st September. Copy of recalculation of amortization to check its accuracy. Board minutes copy to verify how management considering the account balance and accounting for it to see if reasonable. Cash book bank statement a copy to verify payments made against acquiring the license. Mhm.
In board minutes, will they also discuss about how they will treat the impact?
How management considering the account balance, mean through their discussion, we will see whether they are accounting properly or not, where they're gonna record. They have discussed with each other what to do with that. So considering the account balance and accounting for it to see if reasonable. Even through board minutes, we can check authorization for purchase as well. Is that easy peasy? This question was not difficult.
The concept.
Writing, drafting, right?
Yes, writing evidence, the wording is very important.
No, sir, the hard part is the concepts about the IFRS to understand.
I don't know. When drafting seems to be a bit difficult for me personally.
Mhm.
Even I can make the same discussion.
Okay, that's it for today. In next lecture, we'll discuss about accounting standard briefly for this paper. We'll discuss all accounting standard briefly, mean what kind of knowledge for accounting standard required for this paper only. Mean what a point we should remember. So that will sum up in next lecture.
Then sustainable information.
I'll find a question on sustainability as well.
No, we already have it in the XC website in, I think, September or March attempt. Previous.
I'll find that question as well. See you next lecture.